And now I am referring to you, my dear friends, value of supply, also been known as transaction value under the GST, where the rate of GST in terms of percentage applied on the value. Such a rate of tax technically we used to call it as ad valorem rate of duty or ad valorem rate of tax. Ad valorem rate of tax none other than rate of tax which is applied on the value of supply. Now, how to determine the correct value? Otherwise, what happened if I overvalued to pay the tax, the taxpayer loser of money. If it is undervalued, revenue deficit department will raise the notice. So, I should apply the provisions of valuation and arrive the correct value, thereby to determine the correct amount of tax. In this process, I brought to your notice section 15 of CGST Act 2017, which says that if there is sole consideration, what do you mean by sole consideration? The price must be at par with the fair market value. It should not be wantedly, deliberately undervalued. It should not be wantedly, deliberately undervalued. So it should be reasonably considered as price prevail in the market, followed by the supplier and the recipient should not be related persons, should not be distinct persons. If that is the case, one can refer section 15 subsection 1 to subsection 3 to arrive the value. Section 15 subsection 2 talks about the value of supply if not included the following. Clause A to clause E we have under section 15 subsection 2. Under this category we have 15 subsection 2, clause A, clause B, clause C, clause D and clause E. If not added in the given value, you add it. If already added addable item, do not add again. And further, section 15 subsection 3, it is discount deductible nature. If it is not deducted, you deduct another value. If deductible item already deducted, do not deduct. Sir, what you are telling in the given case, how we should proceed valuation? You are telling something add, something deduct. It is as simple as that. You already familiarized with one of the head under the Income Tax Act, PGBP, profits and gains of business or profession. What you are doing over there? You are looking the profit and loss account, receipts and payment account as the case may be, and bottom line. What is the bottom line? Net profit. Choosing the net profit from the books of accounts and keeping outside the books of account, and that net profit you feel not appropriate to pay income tax. Therefore, what you are doing, adding some addition to that net profit and deducting certain deductions from that net profit, arriving a new net profit. That net profit you feel appropriate to pay income tax. These additions and deductions to the net profit of books of account where you carried out this activity outside the books of account. Am I right? Similar to that, we also under the GST, for supply of goods or supply of services or both, we are lifting supply, namely sale value for example, from the books, keeping outside the books of account. That supply, namely sale value, not appropriate to apply GST. Therefore, you are adding certain additions to that given sale value, deducting certain deductions from that sale value, arriving at different sale value outside the books of account, you feel that sale is appropriate to apply GST. So, simple to say that the additions, deductions, the given supply of books of accounts I am carrying out outside the books of account to arrive the correct value. Sir, you may say, if you arrive a different value, for example, books of accounts sales shows 1 lakh, you taken from the sale book value 1 lakh and keep outside the books of account, adding some additions, deducting certain deductions, arriving a new value, let us say 1,80,000 is appropriate value to apply the GST. If you are on 1,80,000, you paid the GST which is shown in the GST1 return as your liability on the value. So the supply shown in the GST1 return 1,80,000, but in the books of accounts sale value is only 1 lakh. There is a difference, no sir. Obviously, that is the reason the government says, GST council says, hey Mr. Taxpayer, under GST, you are supposed to be submit GSTR 9 return, which is none other than the financial statement followed by reconciliation statement, GSTR 9C. Such a 9C reconciliation statement certification earlier required from a chartered accountant, cost accountant, now it is not warranted. You being a taxpayer yourself can certify, self-certify, you can have reconciliation. Now please come back. My point here to say that is the arrival of different sale value than that of the books of accounts, I am carrying out outside the books of accounts by taking the value from the books of account. Now once I arrive the value and apply the value on that value, the rate of GST, it may be CGST, HGST, or it may be CGST, UTGST, or it may be IGST, as the case may be. In this process, now I am bringing to notice section 15 subsection 1, namely the value lifted from the books and keeping also the books of account, and if not added, if not included in the given value, you please add the following. Section 15 subsection 2 clause A says that add all taxes, any taxes other than the GST taxes, add all type of duties, add all type of cesses, add all type of fees and charges to the value if not added already. If not added already. What do you mean this here? Any taxes. For example, my dear friends, I am the landlord. I let out my commercial property to a practicing cost accountant for practicing purpose. For his profession purpose, I let out my immovable property. Per month, I am charging the rent 1 lakh rupee. Now you tell me, am I supplied the taxable supply of services? Yes. What is my books shows rent 1 lakh. Now, in one given month, I supposed to pay the property tax. Property tax for the given property, which almost all worked out here 20,000. 20,000 property tax I supposed to pay as landlord. What I have did here is, hey Mr. Practicing cost accountant, you are paying the rent 1 lakh per month. For this month alone, you have to pay property tax also, because I have to pay property tax. As per agreement, you have to pay property tax. Then this landlord collected from the tenant not only 1 lakh for the given month rent, but also property tax rupees 20,000 collected. And this landlord paid to the department property tax rupees 20,000. Now, for the given month, what is the value of rent? In my book shows 1 lakh. But the law of the land says, valuation of the GST says, hey Mr. Landlord, lift the rent from the books 1 lakh, keep outside the books. This value undervalued. Add, since you have been collected property tax from your tenant, also be add in the value of supply, because section 15 subsection 2 clause A says that any taxes except GST taxes should add. Here property tax, not a GST tax, resulting that addable in the value of supply. If not added, 1 lakh rent, not added the property tax, now add it, is 20,000 property tax. Total value 1,20,000 is the value of supply of service for you, and you have to pay the GST on 1,20,000. Likewise, duties, cess, fees, any other charges. Now, what is not addable here means GST taxes, CGST, SGST, UTGST, IGST should not add. GST compensation cess also should not add in the value of supply. If already given value inclusive of taxes which is qualified for ITC, then you have to be eliminate it. That means to say that the GST taxes should not be taxed again, because GST taxes which is qualified for you input tax rate. When the GST taxes is form part of the value of supply, to apply GST means in one case, exceptional case. What is it is, if I procure the goods, that goods what I procure, I am not willing to avail input tax rate of the GST paid on procurement of the goods. In that case, or that goods what I procured not eligible for me input tax rate, in that case the GST paid on such procurement of the goods will form part of the cost of purchases. If that is the case, on the total cost of purchases which includes the GST, tomorrow when I am going to sell the product, I have to apply the GST on the entire value of supply. In one scenario, I will bring to a notice. I purchase the capital goods. I am a registered person under GST law. I purchase the capital goods for rupees 10 lakhs and paid the GST 28%, namely 2,80,000. So total invoice value shows capital goods 10 lakhs plus IGST 2,80,000. Total bill value, invoice value, the price of the invoice 12,80,000. Now I wanted to claim depreciation under section 32 of the Income Tax Act on the entire value of asset by capitalizing GST part. Namely, I want to claim depreciation under section 32 of the Income Tax Act under the block of assets concept. I want to claim the depreciation on the 12,80,000, which includes 2,80,000 rupees of GST portion. If I claim the depreciation inclusive of GST part, then my dear friends, I am not eligible to claim input tax rate, because I am claiming the benefit of depreciation, higher depreciation, as aware of that lesser profit. There the tax benefit I got under income tax. Therefore, one more benefit of GST on such capital goods not allowed. This is what section 16 subsection 3 says to us. So in the given case, if not qualify for input tax credit, then the tax paid on such procurements obviously form part of the cost. That is exceptional case. In general normal cases, when I procure the goods by payment of the GST which is qualified for me credit, what is the GST qualified for credit should not be form part of the cost of purchases, cost of inward supply. It is a fundamental foundation stone. So taking that spirit into account, you should not add in the value of supply only GST taxes if it is qualified for input tax credit, is the meaning of it. Further, my dear friends, I just refer to your property tax which is addable, not a GST tax. Like that we have entertainment tax, also be not a property tax, not a GST tax. Therefore, like a property tax, entertainment tax also if we add, if not add in the value of supply. Generally, entertainment tax should not be taxed after the introduction of the GST. But what we can do, Tamil Nadu state government charging entertainment tax when you purchase the movie tickets, they are charging entertainment tax. Is not a true spirit of the GST. GST is a submission of all these taxes, including entertainment tax. But the state government of Tamil Nadu says we are the huge amount of revenue losers because of the introduction of the GST, which is destination based tax. Therefore, the exporting state not get the revenue. We are the exporting states. We have high productivity, but we are not getting much revenue because of the GST. Therefore, we want to compensate it. Therefore, we are charging the entertainment tax. Is a claim of the state government of Tamil Nadu, but it is now levying in the state. So, if there is a case, entertainment tax, which is not a GST tax, is addable in the value of supply? Yes, obviously addable in the value of supply. Further, my dear friends, one more point I would like to bring. It is premature to refer here, but you are mature enough to understand. I will refer for the time being, just understand, and I will apply it by working out the illustrative examples subsequently, soon after the completion of this particular series of section 15, subsection 2, class A, class B, class C, class D and class E. There are 5 classes are there. Now I am referring only class A. Once I complete this list, then I will take up the numeric example in the given example, which I am going to bring to notice. What example here I am going to bring? What type of tax we are talking here? Sir, you all of you are aware of that. Tax collected at source under the Income Tax Act 1961. I am talking about Income Tax Act, not the GST TCS. GST tax collected source different. Tax collected source from the income tax is entirely different. Now, when a seller of motor vehicle, luxurious vehicle, where the TCS apply under section 206 capital C of Income Tax Act 1961, 1% TCS on the value, sale value. Sale value, let us say 10 lakhs. Sale value 10 lakhs. On 10 lakhs sale value, 1% TCS, which is comes around, let us say here 10,000 rupees coming here on 10 lakhs.
Yes, sir.
On 10 lakhs, 1%. How much comes?
So 10,000.
10,000. 10,000. So 10,000 TCS. Now seller who sell the vehicle for 10 lakhs and also this TCS 10,000 is coming here to levy. Total become 10 lakhs 10,000. Now on account of sale of these goods, liable to pay GST also. CGST, SGST 14% each, effectively 28%. Now this seller got a doubt on what value I should apply the GST. Here section 15 subsection 2 clause A says any taxes other than GST taxes should add. Now TCS, tax collected at source from the Income Tax Act, this TCS is addable in the value of supply or not addable in the value of supply. Got confused. This taxpayer, honest taxpayer, requested CBIC, Central Board of Indirect Tax and Customs, please clarify, am I required to charge my GST on my value of supply, which includes TCS of the Income Tax Act, or which excludes TCS of the Income Tax Act? CBIC got confused. CBIC written a letter, a mail to the CBDT, Central Board of Indirect Taxes and Customs, I mean to say, the CBIC sent a mail to CBDT for the want of clarification. Hey, Central Board of Direct Taxes, please let us know whether TCS is a tax or not. Here, give me 1 minute time, Mama. Somebody important, my manager calling. Now, CBDT replied to the CBIC. Hey, CBIC, look here. Tax collected at source under the Income Tax Act is not basically a tax. It is not a tax. It is a charge on estimated income. Repeating, CBDT said TCS under the Income Tax Act not a tax. It is a charge on the estimated income of the person from whom TCS has been collected. If the person who is not having the income, TCS will be refunded to the person from whom it was collected. Therefore, it is not a tax, it is only a charge on estimated income. Like that, CBDT replied to the query of CBIC. After receiving the clarification from CBDT, CBIC said to the industry and department officers, tax collected at source under the Income Tax Act is not a tax, resulting that not covered under section 15 subsection 2 clause A. Therefore, such a TCS should not be included in the value of supply when you apply GST. That means, in our given example, the seller of motor vehicle who sells the motor vehicle for 10 lakh rupees and charging the TCS 1%, namely 10,000, and selling it to 10 lakh 10,000, well, supplying that goods IGST 28% on what value? Only on 10 lakhs, not on 10 lakhs 10,000, not inclusive of TCS. So TCS is excluded while computing the value of supply to apply the GST. So 28% GST on 10 lakhs, 2,80,000. So value of the vehicle 10 lakhs, add TCS 10,000, add GST 2,80,000. Totally 12,90,000 is the invoice price. So you understand here, while computing the TCS, we should not include GST. While computing the GST, we should not include TCS. That means, while computing the GST as well as TCS, these two are mutually exclusive. One cannot apply on the other. One cannot apply on the other. Is the basic concept. Clarification of the CBIC is there in this regard, is also available in your material. Relax. Now come back. Further looking here. Section 15, subsection 2, clause B. Supplies made by the recipient on behalf of the supplier. Supplies made by the recipient on behalf of supplier. On behalf of supplier. What do you mean this? Why should we add if not added? A practical example I will illustrate you here. You will appreciate this in this regard. Basically, I am the manufacturer of, let us say, pen. Basically, I am a manufacturer of the pen. One fine day, you approach me for the want of 1 lakh pens. 1 lakh pens you want. Per pen, I said 10 rupees, sir. The total value is 10 lakhs. So, you gave me the order to manufacture 1 lakh pens at the rate of 10 rupees each to supply. So, the entire contract value to supply is 10 lakh rupees. And I ask you, sir, please give me the advance 50%. You given 50% advance. I got 5 lakh rupees advance. I started to manufacture the product. The product is manufactured, going on manufactured. This product is manufactured. This product is manufactured, but not supplied to you. One fine day, you approach me, sir. Long back I given an order to you by paying 50% advance. Till now not supplied the goods. What happened to you, sir? I replied, hey Mr. Buyer, don't worry. Your product almost all completed up to this. Up to this, half of the product is completed. But the cap is there, no, the cap which is not available in my market. I am waiting for the want of the cap. You being a buyer, from me, taken the specification of the cap, the length, width, diameter, size, all this information you took from me, and you spend from your pocket 2,50,000 rupees to purchase 1 lakh caps. 2,50,000 rupees you spend from your pocket, purchase in your market this particular cap, 1 lakh caps, and you made available to me freely. Hey Mr. Manufacturer, take it this cap and finish the product and send to me as early as possible. Then I said, very happy to note. Then I took from you that material and I fit and see. I have fit and tested perfectly. It is tip is coming perfectly. It is rotating fine, excellent. You correctly send the particular cap to me. So I manufactured further to complete the entire product of pen, 1 lakh pieces now readily available, which I packed and I sent to you. When I am sending to you, I should raise the bill or not? Invoice. My invoice value. Value of supply how much? Here 10 lakhs worth of the order. But cap cost you only given to me, where you spend 2,50,000. Therefore, in my 10 lakhs value of supply, I should reduce 2.5 lakhs, and the balance value how much? 7,50,000 for the given product. I raise the invoice and I am sending to you. My sale value I book in my books of accounts is 7,50,000. Now tell me, 1 lakh pieces of this product is 7,50,000 only. It is not so. It's undervalued. Therefore, the department says, look section 15, subsection 2, clause B, where supplies made by the recipient, to supplier freely before supply. That means supplies made by the recipient on behalf of supplier, that value, if anything is there, add, if not add in the value. That means I lift from my books of accounts 7,50,000 and kept outside the books of accounts, and this value undervalued. Therefore, what I am doing? Adding. What is adding? The market value, the value of material supplied by the recipient to the supplier free of cost before supply. How much worth? 2,50,000. So 7,50,000 add as per section 15 2B. Material received from recipient free of cost, which is 2.5 lakhs. 7 lakh 50 plus 2 lakh 50 is equal to 10 lakhs. Is the appropriate value to pay the GST. On 10 lakhs, I have to apply the GST. Is appropriate value to pay GST. Further, my dear friends, 15 subsection 2 class C. Section 15 subsection 2 class C, which says that commission and packing are incidental expenditure. Repeating, commission, packing are incidental expenditure, if any, which is not added, you add it and arrive the value to pay the GST. For example, my dear sir, I am Mr. P of Pune, is a principal. I appointed Mr. A of agent Ahmedabad to sell my product on commission basis. His commission is, let us say, per unit 2000 rupees. I sold one unit for rupees 1 lakh. 1 lakh I sold means I have to pay the commission also to him or not. So 1 lakh plus 2000. 1 lakh 2000 is my value of supply. As simple as that. On the other hand, if I am selling, for example, let us say washing machines. Washing machine if I have sold, I should deliver this into the buyer location. Correct? In that case, loading, unloading charges, packing charges, transportation charges, insurance for transit, this and all I have to calculate and dump in the value of my supply. If I only the machine cost, washing machine cost is rupees 35,000, loading, unloading, packing, transportation, insurance, delivery charges and the door delivery of the customer is rupees 5,000. 35,000 cost of the product plus 5,000 is the all expenditure. Totally 40,000 is my value of supply. That means the packing cost, material cost, incidental cost, ancillary expenditure in relation to the supply of goods and services should add. If not added, is the meaning of it. Further, my dear friends, section 15 subsection 2 class D, interest or late fee or penalty for delay payment. What do you mean this? You are aware of that. What is the time of supply for interest delay payment where the supply is a taxable supply? The date on which we received this payment is the time of supply. As you are aware of that, already we covered. If so, in that case, such interest, sir, you may argue with me, sir, interest is a money transaction. No, sir. Sir, if it is a money transaction, we should not be added at all because the main supply is not taxable. This ancillary interest also not taxable. You are aware of that. The banker given the loan money and charging the interest money, not taxable. Main loan not taxable, interest not taxable. If I am a seller of laptops, I sold the laptops on credit basis and you are paying that belatedly along with the interest. Say supply of laptop taxable? Yes. Main supply taxable. What I am getting from you, the interest for delay repayment is also taxable. Such interest, if it is there, you add in the value of supply. But the only thing is here, when you talk about interest delay payment and all, in general, the person who paying the belatedly repayment along with the interest on which again GST is to hardship. Generally, we feel that the interest delay payment charges and all we used to compute in general as an inclusive basis. The GST as inclusive basis. If the problem specifically says that the given interest is taxable but not included in the GST, in that case you take it as exclusive basis. Nothing specified the interest, late fee, full and final settlement. This and all generally comes into picture by application inclusive basis. If specifically says the given interest is exclusive of GST, then accordingly. Now please come back. Referring here, section 15, subsection 2, clause E, subsidy directly linked to the price. Subsidy directly linked to the price. Important to note. Subsidy directly linked to the price. Subsidy directly linked to the price. Addable. Sir, my name is S Limited, a subsidiary of H Limited. H Limited is a holding company. S Limited is a subsidiary company. This S Limited subsidiary company selling the fertilizers to the farmers per bag 200 rupees. On account of my achieving the targets, my holding company appreciating the subsidiary company and given subsidy per bag 20 rupees. I am selling fertilizers at what price? 200. I achieve the target. So holding company appreciated and given me the incentive. Given to me incentive. How much incentive is given? 20 rupees per bag. That means subsidy I got for a given product directly in relation to product. Therefore, I can sell to farmers at 180 rupees per bag. Now 180 rupees I am collecting from customers on account of sale of my fertilizer per bag, and 20 rupees per bag subsidy I am getting from holding company which is directly relating to the product. In that case, what is my value of supply? Value of supply 180 plus the subsidy from holding company directly relating to the product, which also we call incentive directly relating to the product, should add in the value of supply. 180 plus 20 is equal to 200. On 200, subsidy company liable to pay GST. What do you mean by not directly linked to the product? I will tell you. If it is not directly linked to the price, subsidy directly not linked, that means indirectly linked. What do you mean this? Now holding company giving subsidy to me to purchase the land for my expansion of business. Holding company going to buy the land which is 5 crores. Holding company giving to me 1 crore incentive subsidy to buy the land. Land is nothing to do with my price of the product or service. Therefore, such a subsidy should not be added in the value of supply. At the same time, if the subsidy I received from government, which may be directly relating to my product, in spite of that should not add, because government subsidy from government should not be taxed. Is one of the basic concept under section 15 subsection 2 clause Z. What do you mean this? Same fertilizer seller S Limited selling 200 rupees per bag of fertilizer to farmers. He got 20 rupees per bag subsidy from state government of, let us say, Andhra Pradesh. In that case, if I got 20 rupees subsidy from state government and 180 rupees from customer per bag, what is my value of supply? 180 rupees. Do not add subsidy directly linked to the product received from government. Government here includes central government, state government, union territory, but does not include local authority, does not include statutory bodies. Government subsidy from government directly linked to the product should not add in the value of supply. Like this, if I arrive the value from the given value, finally here discount. Section 15 subsection 3 of CGST Act. Discount is allowed as a deduction if not deducted already. After that arrive the value. That value is known as transaction value. That value known as transaction value. How to understand, my dear friends? These are all the points I will tell you. With regard to discount, I bifurcate the discount, which you are aware of that. It may be trade discount, it may be cash discount, it may be quantity discount, buy one take one free. Whatever may be the nature of discount, I bifurcate into 3 parts. Part 1, part 2, part 3. There are 3 segments. Now, the first part of discount, which is given when? Before sale, before supply. That means a person want to buy from me a machine which is worth rupees 1 lakh. He bargained with me. Sir, could you able to sell at rupees 90,000? I accepted. So I raised the invoice itself for 90,000. Discount of rupees 10,000 I given even before sale. Then what is the value of supply? Only 90,000. So the discount rupees 10,000 should not be added in the value of supply. If already added, you eliminate that 10,000. Allowable deduct, part number 1. Part number 2, discount. Category number 2, discount. I promised to my buyer I will give the discount after sale if the buyer satisfies the condition. I mentioned in the invoice sale value 1 lakh down. If the buyer going to pay the invoice value within 30 days from the date of invoice, discount will be given rupees 10,000. So in the invoice very clearly mentioned, at the time of sale, I identified this discount to be given after supply. I sold the goods and I collected 1 lakh rupee from the I supply the goods, not collected 1 lakh rupee because it's credit sale. I mentioned in the invoice, if the buyer going to pay within 1 month from the date of invoice, the 10,000 rupees discount will be given. So like that, invoice I mentioned and I sold on credit basis, payment not received. I sold the machine at rupees what price? 1 lakh. I have to pay GST on 1 lakh. Buyer within 30 days from the date of invoice, he paid to me. Then obviously I have to give the discount or not? 10,000. So here this discount of rupees 10,000 allowable as deduction. Sir, how possible, sir? In the previous month you sold for 1 lakh, you paid the GST on 1 lakh. In the next month within 30 days he made the payment only 90,000 rupees. Then how can you deduct, sir? Simple, sir. By way of debit note, credit note concept, we make adjustment. For me, if I say credit note on which for me GST is my credit as a supplier. For you is a debit note means for you debit note on which GST is a nothing but liability for you. In 1 month I paid the GST on 1 lakh because 1 lakh is my sale value, 18% GST, 18,000 rupees I paid. Next month you paid to me within 30 days from date of invoice only 90,000. Now I am raising the what? Credit note to you as a seller. For what value? 10,000. All with GST 1,800 is my credit. So previous month liability 1 lakh on which 1 lakh on 1 lakh 18,000 liability. In the current month my credit is 1,800. So 18,000 minus 1,800. Balance is nothing but GST on rupees 90,000 only. Is the way in which we have to make adjustment in the books. Being an accountant, you are aware of that. It is your cup of tea to make adjustment by way of debit note, credit notes. So discount, there are 2 types. First type and second type explained to you. First type given after even before sale, allowed reduction. Second type of discount which is promised to give if the condition satisfied by the buyer. So buyer satisfy the condition, discount is given after sale, allowed reduction. Third category, it is neither promised to provide at the time of supply nor to be provided after supply. I sold for 1 lakh rupee my machine on credit basis. After that, I am running with the financial crunches. I want the payment early. Therefore, seller says, hey Mr. Buyer, are you going to pay within 3 days? I will give the discount of rupees 20,000. Like that. This 20,000 discount, have you noticed at the time of sale? No. Have you mentioned invoice? No. Neither given before sale nor mentioned to be provided after sale in the invoice. Such a discount offered at a later period of time, which is only book entry can be made as a discount but not allowed to adjust with my liability. That means such a discount not allowed as a deduction from the given supply. A third category discount which is neither given before supply nor mentioned in the invoice to be provided after supply. Such a discount at a later date offered by the seller to the buyer, such a discount is not allowed as a deduction. It is a third category of discount. So, like this, If you keep in your mind, section 15 subsection 1 book value, add to that 15 to class A to class Z if not added, deduct from that section 15 subsection 3 discount wherever allowed to deduct and arrive the value. That value finally what you got is a transaction value which is appropriate to pay the GST. If the rate of GST here IGST 18%, apply on the value 18% on that value to pay IGST. Yeah. Yes, Amma. You know trade discount means which is given after before sale. Trade discount means before sale. Trade discount is before sale. You are aware of that? Trade discount is before sale, which is allowed as a deduction well before sale, allowed. Cash discount after sale. After sale, cash discount. Such a cash discount after sale is also allowed a deduction from the sale value provided if it is mentioned in the invoice to be provided after sale if the buyer satisfies the conditions. Is clear? So trade discount, cash discount, both are allowed. It may be trade discount, it may be cash discount, immaterial, or it may be quantity discount, which you are aware of that. Buy one get one free. Quantity discount also be allowed in deduction. No problem. But it should be condition based. It should be provided before supply or at the time of supply should be mentioned to be provided in the future period of time. Then allow the deduction. Is clear? Fine. Yeah. So at this point of time, I'm concluding session, and hopefully we have the class in the evening today at 8 p.m. 8 p.m. now people will be relaxed by the time. Am I right? Before going to bed after having the food, just come relax for 1 hour. 8 p.m. to 9 p.m. we have the class evening today. Special class. Please cooperate, my dear friends. Thank you. Thank you, Dorinder. Have a good day.
Thank you, sir. Thank you, sir.
Thank you, Amma. Thank you.
Thank you, sir.
Thank you.